Welcome back, friends. Today we're going to do two things. I'm going to walk through the very basic journal entries for a purchase and a disposal of property, plant, and equipment. And then we're going to walk through the purchase and construction of a building, dividing out the costs between the land and the building itself. So with that, let's get started.
Understanding a basic purchase and disposal is kind of going to be really helpful. If you don't have this down, the rest of what we're going to cover will be that much more complicated. So real quick, just a very quick basic. If a company purchases equipment for $12,000 of cash, that is going to be a debit to equipment for $12,000 and a credit to cash of $12,000. So we'll offset. There we go. So there is our purchase of equipment to cash. So we're trading cash, which is an asset. So we're going to reduce cash by crediting it for $12,000 and increase equipment, which is a debit to equipment for $12,000. So that is just a transfer between two resources on the balance sheet. We're trading in cash for equipment. Now, if a company then disposes of a piece of equipment with a purchase price of $12,000, accumulated depreciation of $3,000, they dispose of this for cash of $10,000. So if we're doing this, we are going to, we're getting cash of $10,000, and we need to get rid of our accumulated depreciation of $3,000, and then we need to get the equipment off our books, which was $12,000, and there's actually going to be a gain on disposal of $1,000. Shouldn't be 13 each yet. So, and that is the recognition of this. We have a gain on disposal because we are selling something that has book value of $9,000, which is $12,000 purchase price minus $3,000 appreciation, gives us a book value of $9,000. We are selling something worth $9,000 for $10,000. Well, if we have something on our books for $9,000, we sell it for $10,000. That is a gain of $1,000. So that is how we calculate this gain. It's also the whatever. If we take our debits and our credits without the gain, our credits are $1,000 short. So we need to have a credit, and a credit to the income statement is a gain. So that is a basic acquisition and disposal of equipment. Now we're going to move on to acquiring land. So first company purchased land as a production site for $584,000. The process of tearing down 3 old buildings on the site and the construction of the factory required 6 months. So the company paid $61,000. I'm just going to round all these when I read through them. We'll pull the specifics when we go and do it. So the company paid $61,000 to raise the old buildings and sold salvaged lumber for $9,000. Legal fees of $2,700 were paid for title investigation and drawing the purchase contract. They paid $3,200 to an engineering firm for a land survey and $99,000 for drawing the factory plans. The land survey had to be made before definitive plans could be drawn. So though the survey was associated with the drawing of the plans, not the purchase of the land. That is important. So title insurance on the property cost $2,100. Liability and premium paid during construction was $1,300. The contractor's charge for construction was $4 million, and the company paid the contractor in 2 installments of $1.7 million and $2.2 million upon completion. Interest costs of $248,000 were incurred to finance the construction. So there's all of our costs. I've gone ahead and listed them all out here. So all these are all the costs that they talked about up here. So now we're just going to go through and assign them to either land or buildings. In this case, all of these costs will either go to land or buildings. There are plenty of other types of costs that we could incur that would have nothing to do with land or buildings. We could throw in, say, the salary of a plant manager. During construction, the plant manager earned $50,000 associated with managing the current production facility. Well, that is not a cost of the land or the building, so that would not fall into these categories. That's not in our list. These costs are. So first of all, land cost of $584,000 is very clearly that's land. So $584,000 is land. Raising the old buildings, again, this is going to be getting the land ready to build. So we are going to tear down the old buildings. That is going to be a land cost of $61,320. We sold salvage materials of the old building. Well, that is actually an offset to the price costs, because that is an inflow associated with, basically, this is a salvage value kind of thing. So we got salvage of $9,100. That's going to offset the cost of the land, because the land, this is a piece of the land. It'd be the same thing if we sold, let's say we sold the timber off the land when we cleared it. Well, that is an offset to the cost of the land. Doesn't have anything to do with the building, but that would reduce the price of the land. So the title search, so for those of you not familiar with the process, when you purchase a piece of land, you are buying the title to that piece of land. There is risk that somebody else actually owns the land. For instance, someone other than the person you are buying the land from. A title insurance company goes and does a title search, which they search through all the different transfers of this land with the goal of identifying who does have title to this piece of property. So you also will pay for title insurance, covers you in case something like that happens. So title search, title insurance are both associated with the land. They are not associated with building. So we're going to put the cost for the title insurance, which was, or title search. We'll start with the title search was $2,701. Survey. Oh wait, we'll put it in title insurance while we're at it. So the title insurance on the property was $2,190. There we go. Okay. Now we have surveys and plans. Now the survey and the plan. The survey was done to determine what we could do with the plans. So the survey is a cost of the plans. There are times when the survey will be associated with the purchase of the property and not the building. In this case, the survey is going to be associated with the building, not the property. So our survey 3212 and the plans were 99,280. For construction, well, this was liability during construction. So this is a cost during construction. That's pretty straightforward. That is a building cost, 1314. And then the contractor is, the contractor's building the building. So the contractor was a total cost of $4,400,000. And then interest during construction. So interest during construction is going to be the building. Interest is going to always be associated with the building. 24,200. Okay, so that should give us $641,000 and $641,013 for land, and $4,352,406 for the building. So that checks out to what I have done before. So there is our land and there are our building costs, allocating all this between the two.